Okay, so this video introduction is about the gap trader script that is part of the core strategies and indicators that's offered at the daily edge. And this indicator is responsible for plotting the most recent 20 gaps for any instrument for a session window of your choosing. And I'm going to go over starting with gap theory and why it's useful to any trader on identifying potential support and resistance levels or potential price magnets where the price is most likely going to visit in the near term. So what I have in the background here is the ETF representing Russell 2000 IWM. It's a very popular ETF. And I have one indicator on the chart, or actually I have two. I have volume and I have the gap trader tool in the background. This entire guy is gap trader. So what it is plotting, it is plotting the most recent 20 gaps. And a gap is recognized as a price, a closing price, or a settlement price that is not filled in the next session. So if we go back to Friday, April 24th here, to this close, and I have it set for the settlement close, so settlement's a little bit different than the last close at 1600 for the NYSE. The calculation is different. The settlement is based on the exchange. And that close was 122.41. And then the next day on this was a Friday. The next day, the next session on a Monday, there was a gap and go. The price just gapped up and kept going and never revisited this area down here. It never revisited this price. What that did was automatically pop up a gap for the Friday, April 24th close. And at the time of the printing, it showed that it was 3 days since it was filled. That's what this little number in the parentheses represents, which gets updated along the way as long as the gap is not filled. It did not get filled until May 4th. And as soon as May 4th happened, near the open, there was a circle printed, which you can change what this icon actually is. You can change virtually everything on the Gap Trader tool. You can change what the unfilled gap character looks like. It can be many different things. You can change it to a clover leaf if you want to, and it will print that clover leaf every time it's not the gap is not filled. So you can't really see it because they're all kind of on top of each other, but it's there. When that gap was filled, it immediately created a price rejection. So you can see that the price bounced, and it bounced hard as soon as that gap was filled. It's important to know where gaps are because the tendency for price to bounce is high off of a gap. And sometimes the big players will front run gaps. They'll sneak up towards the gap and not quite fill it, then back away, and then finally fill it maybe a day or two later or something like that. So they're definitely price magnets for whatever ticker you're dealing with to actually visit. There's another instance right here where the price gapped down, went up slightly, backfilled an old gap from this Monday. It looks like it barely missed right here on the April 28th. And this April 27th gap was backfilled. When I say backfilled, I mean that there was a gap down beneath. There was a gap down from the previous close up here to the new open down here from April 30th to May 1st, went up slightly, backfilled this gap that went all the way back to this location, and then continued to descend down. Finally, at the next open, another gap down from this close, dropped here, hit this gap that we talked about, and increased. So we can see that gaps have a tendency to reject price or support price and tend to be price magnets. Something like 70% of all gaps in the NYSE indexes are filled over time. And even gaps that you thought would never be revisited, such as this recent sell-off from the top in 2020, we filled many old gaps that were left behind for 2 to 3 years in the Dow Jones. So what I want to go over next is this previous close that shows you a line that you can actually adjust to whatever you want. This previous close is showing that there is a current close that was on May 15th that was not filled. As soon as the market opens, this value is going to change. It's going to show the previous close from yesterday's close. Today's Tuesday. This would be the Monday close. There's a huge move up overnight. And this looks like an island bottom down here. And from this location here like this, there was a gap down into it and a gap away from it. It looks like an island bottom. So as soon as the market opens, this number right here for previous close is going to move to this new close from the previous day. Now, something interesting about this gap trader indicator is what I and all of the followers that I have and all of the members in the group actually use this for. When you change this, I'm going to change this session window. In the description of the actual gap trader indicator on TradingView, I discuss how the real future settlement in this case, now I'm going to go to Russell 2000 futures. If I go on my profile page and I scroll down to gap trader, where is this guy? What it's going to show you and what it's going to describe is that for CME futures, the session must be offset by 1 hour for Central Time. I'm going to dive into using gap trader on index futures or index CFDs like JPN 225 or JER or GER 30, German 30 for the DAX, or ES or NQ, or even CFDs like SPX 500. That's where this tool really shines. So the indicator has the ability to plot the gaps for a session window of your choosing. So for CME futures, the session window that is of interest for USA equity index futures is the 9:30 a.m. open Eastern Time to the 16:15 or the 4:15 p.m. close, and specifically 16:15. This changed at some point when they started offering options that extended into 15-minute post-market. There is a 15-minute break on futures that happens every day from for equity futures like ES, like NQ, like YM, that happens every day at 16:15 to 16:30. There's no action, there's no price action for the settlement. Then there is another break from 1700 to 1800, so 5 to 6 p.m. This 16:15 price is the important, or time is the important one. So I ask everyone to set the session window for CME futures, CME index futures to 8:30 to 15:15 because you must offset for CME Central Time. For some reason, TradingView reports the time for all CME equity futures, not CME mercantile things like GC, gold, or oil. You can keep that at 0930 to 1615, but specifically for these index futures, you have to offset 1 hour. So what I'm going to show next is if I have this plot, this index, or this indicator, gap trader, I can actually provide the session window of my choosing. And in this case, it says it's in Central Time. Remember, we're dealing with what I just talked about before. So this is really saying from 9:30 to 16:15 Eastern Time. And I'm getting the same gaps reported on the futures. This is where this thing is really interesting. Now I'm actually showing the gaps for the closes because futures run almost around the clock. You don't really see that many actual price gaps like this in CME futures because they run so often compared to stocks or indexes that only run something like 6.5 hours per day. So this indicator is actually plotting the gaps for that session window, and it's showing you where they're getting filled. And now we're seeing some really interesting things about rejections. So let's take this example back here for Friday, April 24th. It wasn't actually filled for the 1615 gap here. And why was it not filled? That's because the time, if you can see at the bottom, was 18:30 or 6:30 p.m. So it's after hours. So it's not technically filled yet, but can still act as price support. So when the price reached this Friday, April 24th gap, it didn't fill, it didn't plot one of these big cyan circles on the price, but it did act as price support. This gap was not filled until May 13th, where this circle was printed and the price next to it. So since we're dealing with futures and now we can actually see something like pre-market, meaning that I'm outside of my session window that I described. I'm outside of the 8:30 to 15:15 Central Time or 9:30 to 16:15 Eastern Time. It's saying that we're in pre-market currently, and the previous session close, today's Tuesday, this is from Monday, the previous close at 16:15 Eastern Time was 13.33 and 20 cents. So that's where the price closed at in the previous session. So that's where I really like using this indicator for futures because it shows me the active gaps, and then you can see where when you start getting into a condition where you're filling many gaps very rapidly, the gaps kind of act like a net of support. So on Friday and Thursday, we reached what I considered would have been a big, ABCD correction, where it would be AB equals CD correction level. Somewhere around here was the target for that AB equals CD correction. Somewhere around 1190. Somewhere around right there. When you see a lot of gaps corresponding to some kind of a target, it's a good idea to use that as probably an exit point. And if you see a lot of volume associated with these gap fills that are happening, these gaps took a long time to fill. They took, at least 20 days to actually fill these gaps, I would say. Not 20 sessions, just 20 regular days. So, seeing these two gaps fill that were very close to each other, expecting some type of price bounce in this area, this was a good place to maybe step out and take some small longs, or to close a lot of shorts, or do both. What Gap Trader also provides, and I want to go over something next here that's really interesting that I've been doing for years. There is I am not sure about the accuracy of these percentages anymore because it goes to 2013, but I'm sure that they still have some validity. There is a probability of the previous close being filled, and in this case, this previous close right here, 1333.20, has some kind of and if I let's pull up ES now. Pull up ES futures, S&P 500 futures. There is a probability the previous close from Monday is 294.294.750, so we're right underneath it. And I am going to predict that we fill this close. If we open at market open in about 18 minutes, it's 9:12 a.m. Eastern Time, I am going to bet that this previous close that says pre-market previous close is going to be struck inside of the 9:30 to 16:15 session window today. And I can do that with a certain probability. Yesterday's candle on S&P 500 for just the market hours 9:30 to 16:15 was a green candle. If I pull up SPY, for example, and look at it, the session window had a close greater than the open. The candle body color was green. Ignore all the stuff like this, is because my session window is not matching what the actual real price activity is. It's set for a window that doesn't exist for SPY, because I'm not in extended market hours. So the concept of 8:30 in the morning doesn't exist. So I'm going to bet that by the time the 9:30 to 16:15 session window expires, that we're going to visit this previous close. This little guy that I keep as a bookmark and a tab open in Chrome, I've been using for a long time. The next iteration of Gap Trader is actually going to include these probability distributions, because I'm logging this information over time and storing it on the Daily Edge servers to categorize the type of gaps that are generated from day to day, and the probability that the gap will be filled. And when I say gap, I'm talking about the session gap. So right now, if you can only imagine the session gap, when I say session gap, I mean that yesterday's price action for the session was 9:30 in the morning to 16:15. So this was the open. And 16:15, this was the close right there. Oh, no, wait. This was the open here and the close. Okay, so the open was down here. It had an interesting close at 16:15, so this is the open, and then the close was slightly above. This represents the candle body, the candle body yesterday from 9:30 in the morning to 16:15. And then you would have something like your wick drawn. And I have actually a tool that can do this for you. I'm going to match this with that low right there, and I'm going to match this with that high. So imagine this was your candle. This is your big day candle for SPY in the window of 9:30 in the morning to 16:15. It says 1600 down there, but this is a 15-minute candle. So the very next open is 16. The end of this candle is 16:15. This is my candle that I had for SPY yesterday. This is the entire daily candle. And that's what Gap Trader is using as the session window that I have prescribed for it. Inside of this probability distribution, it's showing 10 different zones of gaps. So yesterday's candle, we go to the right side because yesterday's candle was a green candle, and because the close was greater than the open for the session window of 9:30 in the morning to 16:15. We are slated in about 13 minutes to open between somewhere between the close and the open. So we're going to open between the close and the open somewhere is where this looks like it's about to open. I'm inside of the body of the candle. The close is just the yellow line, but I'm drawing this pink line over the top of it, just to understand. That says that the probability of us revisiting the previous close by the end of the session for ES is 75%. We are opening between, the candle is an up candle. We are opening between the close and the open, so C and O, and that distribution has a 75% probability. The really good ones are the ones where you have an up candle and you open between the high and the close, or you have a down candle, a red candle, and you open between the close and the low. Those are the highest probability fills. So we have a 3 in 4 chance of filling that close. So I am guessing that is what we are going to do by the time the session ends. So we have a full 6.5 hours to accomplish that probability and make it come true. So I believe that's exactly what's going to happen at the open. I use this for these high probabilities that are above 70% and above. I will take that trade every time, and I will buy the open with certain stops in mind and set my target, at least initial target, for the previous close. And in this case, about $7 above it, so we would get maybe $350 per contract of ES futures. That probability is actually really important over time because you can use it in your favor to just get, nickel and dime the market in just another way. It's just another tool to use. So the future at the Daily Edge will be myself using all of these gap fills and probabilities to actually show in real time what the probability is going to be for select indices. You can also do things like CFDs, and you're going to want to change the session window. Right now, because of Eastern Daylight Time, the Japanese exchange in Tokyo opens at 8 o'clock Eastern Time. So if I adjust the window, I can see the gaps for the window of 8 p.m. Eastern Time to 2 a.m. Eastern Time. Local time, I don't know what that is. I think their exchange opens at 9 o'clock in the morning. I'm not sure about this. This might be 3 a.m. I'm not entirely sure what that actually is. It might actually be 3 o'clock in the morning. I'm not sure. So you can definitely use this for other CFDs to find the gaps and show them on the screen. And gaps continue to be support and resistance even after they're filled. And that's because they're associated with dark pool levels. And I go over the dark pool levels all the time in the Daily Edge group. And we have the ability to query these gaps anytime we want by using the Telegram application to get things like block summary or dark pool summary for ES when I convert it into ES for the past 10 days or something. I can convert it from SPY. It's actually drawing it from SPY for the last 10 days, 10 sessions. And we can see that we're above a lot of these dark pool blocks. Things like these places right here, these are the late blocks from the previous session that get posted at the previous session close. They're late blocks that show up on the tape the next day, and they all appear at the same price as the settlement close from the previous session. They were hidden from the order book and hidden from the tape and don't show up until the next day. So these guys right here, when they appear on May 13th, they actually corresponded to block trades performed on May 12th, the previous day, and the tape doesn't know what to do with it, so it just posts it as the previous session close. So we see those all the time. This was a huge one on May 18th. 12 million in SPY blocks that actually occurred probably from, well, since they occurred yesterday, it actually occurred from 3 days prior. So May 15th is when all of those took place. So that means, what that means is dark pools were buying all day long on Friday, and they hid them from the order book and did not show up until the following session on Monday. And they all showed up at the previous session close, 28.58, which would be the previous gap that we're actually showing now. 28.46, but the settlement for SPY is different, so it actually showed up at 28.58, somewhere around here, where we closed right around this area, and they did not show up until the next session. Those are dark pool blocks, and they're hidden from the public. Daily Edge has a lot of stuff going on right now or a lot of things going on in the back end to actually discover these blocks and show them in real time to the trader. So this, I will probably go over additional content for Gap Trader, but this is the basics of how to use the indicator and why it's important. Gaps oftentimes show where the price is likely going to go. So yesterday in the chat group, we were looking at this huge rally that some of us started to go long right around this area that I was talking about before in the video, that it was a likely target for a big correction, big ABCD correction that ended somewhere around here was the target. Somewhere around 22,900 was that ABCD level. This is where I closed a lot of shorts and started going in long on Dow Jones futures right around 22,900. And yesterday, after this huge extended move, we figured that it was likely that this gap from April 29th, this April 29th is the FOMC date gap where we started shorting for the May seasonality. Then we closed on the vast majority of those trades, figuring that the seasonality might actually end early this year for an election year. And we were right. I wasn't entirely long, but I was net long. But I wish I was a lot more long. But I was not expecting a 1,000-point Dow Jones move off of real or fake Moderna pharmaceutical news. We thought that this April 29th gap could be a likely target. As soon as it was hit, the price really didn't go higher after that until we spiked up after hours. And I can go over this in the next video talking about Pivot Trader, why this was likely a place for rejection here and why I expect the price maybe to descend somewhere around here over the next couple of days before possibly going higher. So we're right around the previous close on Monday opening for Dow Jones futures. So it is likely that we will immediately go up to this close, fill the gap, and when a gap is filled, this little X mark prints that you can change to anything that you want. That's what that little X guy is. The little X represents that the close was actually filled from the previous day inside the session window, and that no gap will actually be reported for that particular session. The gap was actually filled. There was a gap that was generated, but it was filled. So one of these guys that actually shows a historical gap that exists is not going to be printed. Remember that the gaps only print the most recent 20 gaps. That's a limit in TradingView for now until they release the arrays in the next PineScript version that we're working on. Once that happens, I can actually show probably the most recent 50 gaps in price history. Gaps show targets for possible locations for rejection. And it is entirely possible that for Dow Jones futures that we may actually just stay in a range for the next couple of months represented by these two big gaps. I am not sure, but I would not be surprised if that's what happens. There's still some gaps left to fill. We still definitely have gaps left above generated from on the way down. And I would suspect that we're going to fill all of those gaps sooner or later, on the way up, on the way down, until we reach that threshold where the gaps in recent price history are maybe 70 to 75% filled. Okay, stay tuned, and I will try to update this indicator when there are new developments and new improvements. If you follow me on TradingView, you should see a alert every time my status changes or that I have updated a script. You can actually see that every time. And any kind of, if you're a subscriber on the Daily Edge website, you should get email notifications on important updates to scripts as well. This is offered in the Daily Edge Core. Daily Edge Core subscription includes Pivot Trader, Gap Trader, and a basic strategy for scalping the markets that you can look at. We go over these. I use this EMA ribbon strategy constantly now because it's worked so well when VIX is above 25, and I'm using it across a wide variety of instruments. Pivot Trader is something I'll definitely go into next. And combining all three of these strategies represents the core trading paradigm at the Daily Edge, where you can profit and grab a huge amount of the ticks and the pips that are available to profit and grab every day. You can take part in the vast majority of trades by using these three indicators together on the same chart. Okay,